Yeah.
All right. Good. Everybody's starting to get on now. That's great.
We are recording. We'll send a link to the recording to everybody and a copy of the slideshow to everybody too afterwards. So they'll all have it.
Amber, I'm sending you an email right now.
Okay.
Hey guys, we're just waiting for other people to log on. We just got a few more people to log on. We'll get going. And I'll share my screen in a minute after Carrie does her introduction. All right. People are still logging on. How's the weather down there?
Oh, it's beyond beautiful. Like,
I'm so jealous.
80 to 90 degrees every afternoon, and gorgeous, sunny.
That helps. I'm sure that helps a lot.
I know. So all of us are stuck inside, and I don't know. We have this little shopping center right next to my neighborhood, and there's like 40 people walking the parking lot because the parking lot's empty, and there's you can't stay inside anymore. So yeah. So it's boating weather right now, and nobody can go boat. So
it's like 40 and rainy here, but I'm putting my boat in the water this weekend anyway. I don't care. We're making it happen.
I don't even get in the water until it's been a solid 95 degrees for a week because the water's so cold.
That's like August for us. We get like 1 week of it in August, maybe.
Oh my gosh.
We're just happy if the sun's shining right now. So
yeah, it's like August, September, and October here are almost unbearable. Like my hair just grows out because it is so humid and so hot. Yeah.
All right. What time is it? 10:32. We got, looks like, okay, there's one more person just hopped on. It's up to you when you want to just get it going.
Do we have any? Oh, so we have 13 people in here?
Yep.
I haven't shared most of our people. Okay. I mean, I'm happy to welcome everybody, and we can get started. We can just let people come in as they go.
Yep. That's fine.
All right. Okay. All right. So everybody can hear me, right? Hear me and see me? All right. So we're going to go ahead and get started. And I just wanted to welcome everybody that's here and say thanks for everybody for jumping on. But I did want to introduce our presenters today and kind of tell you how we got connected in this crazy digital world that we're living in right now. So Randy Dickey, who is the owner of ACX Cheerleading and Tumbling, he's one of our chamber members, and he called me up and said, hey, I sat through this webinar today and it was probably the best information I've received yet. So I want to connect the two of you guys. And so our friends, Aaron and Amber with Straight Line, they are in Massachusetts, not here in Irmo. And so they're doing this webinar for us, just as a service through one of our chamber members. So I'm going to turn it over to you guys, and this is interactive, and please feel free to ask questions as you go along. So Aaron, Amber, take it away.
All right, I'm going to get the webinar up. Just give me 1 minute. I keep fixing the settings and they keep going back. So here we go. All right. Can everybody see my PowerPoint? Great. All right. Well, welcome. Everybody hear me okay? I hope. Okay. Just as a total side note, if you hear my voice apparently turn into like Batman, this is apparently has been happening when I've been going on some webinars and Zoom meetings. I can't hear it, but if I, like I said, turn into Batman, sorry, I guess it's weird.
Just enjoy, I guess.
Yeah. So we don't know how to fix it. So it's just the joys of Zoom. Anyways, so I'm Erin Andrews. I'm one of the owners of Straight Line. We have an accounting firm up in Massachusetts. I'm actually a third generation accountant. My grandmother was, and then my parents started a CPA firm 40 years ago. They still work remotely, fully to Florida. And my husband and I now own Straight Line, and Amber has been with us one of the longest for 7 or 8 years. We specialize in small businesses. We work with them year round, throughout the year, super proactive. We do bookkeeping, accounting, just general business consulting. And we're very into educating our clients on not only, tax legislation, all that exciting stuff, but how to run their business, best, approaches to take, culture, and all sorts of things like that. So when when all this stuff happened, we were happy to help the business community and jumped right on it and learned as much as we can. We are learning as much as we can about the CARES Act. And obviously there's a lot going on. So we're just here as a resource for people. We just want people to survive through this. So again, we're just, many small business owners start their businesses because they love what they do and they want to get into it, but they really don't know how to actually run a business. So we're just here to help people, to support them with financial data, obviously, but education, be a resource, basically partner through the year to help business owners, to guide them, make good business decisions and give them tools and resources. So, all right, so just a couple housekeeping items. I did just turn off the chat feature because we found that people use the chat and the Q&A can get very confusing and hard to keep up with. So if you have questions, please ask it in the Q&A section. Amber will try to keep up if there's typed answers, but I will go through them every couple of slides just to kind of stay up on them and answer questions. And I try not to keep it open, otherwise I distract myself throughout the presentation, but please ask them in the Q&A. And it's okay if we went over something and you still don't understand it, please ask. I know this stuff is very confusing. We will have a Q&A section at the end where you can raise your hand. There's a little hand like this you can raise and we will unmute you. We will have the slides available as well as this presentation available, and we'll make it available to Kerry to share with all of you, and we will send an email out at the end of this. We're very heavily into social media, so we post pretty much everything that we do on social media. We have Straight Line, so our business is pronounced Straight Line, even though it looks kind of funny, Strat Line. We have a really good social media presence, like I said, and we did start a Facebook group recently just to kind of streamline all of our resources. We post the webinars on there, and we try to keep updates daily or multiple times a day with everything that's going on. Obviously, you guys have seen things are changing almost hourly sometimes. So that's a really great resource to go. It's free, and you can just go on there, ask questions, and stay on top of some of the news. All right, so our agenda. I decided with this one, we're gonna strictly stick with the business aspect and go over the Paycheck Protection Program and the loan forgiveness, the EIDL, the Economic Injury Disaster Loans, and the grants, what we know now, like next steps that we're recommending, and planning and documentation once you get the loans. I've gone over unemployment as well as the stimulus rebates. If you guys have questions about that, I am more than happy to talk about it. I just didn't want to really draw out this presentation because there's a lot of information and it kind of can be overwhelming. So, but if you do have questions about the unemployment or the stimulus rebates, more than happy to answer any questions. Absolutely. All right, let's get going then. Oh, I have to say this is not legal advice, and you should talk to an attorney if you have real legal questions, or we can't give any advice directly regarding your direct questions about your business. So I have to put that in there. All right, so the Paycheck Protection Program, what is it? I'm sure all of you have read now and heard about it. Basically, this program was designed to keep America working. What that means is it's almost as if they're doing an unemployment funds through the employer. So it's being funded federally through the employer, and it's to keep employees paid during this crisis. Now, what it is not intended for is for an example, a restaurant who's closed right now, and they're not essential, for the restaurant to go get this loan tomorrow or early next week, hire people back with nothing, for these employees with nothing to do, and just pay them just to get loan forgiveness. That's basically defeats the purpose of this program. It's designed for companies that are still in operation. Like we have an accounting firm, we're still in operation. We have all of our employees, but our revenues have dropped because, you know, all we do is service small businesses. So that's just a good example of that. However, with that being said, you can apply for this later on when you do find out that your business can be open. So example is, let's say you're a restaurant and you find out that the quarantine will be lifted May 15th. You want to go ahead and apply for this around like May 1st, May 7th. So you can prepare, and it's to get you through the first 8 weeks that you're open. So you hire your employees back. It's intended to get you off your feet until the economy picks up and your business picks up. I'm going to get more into that later, but there is some confusion there where people are running out and applying for this when they have no employees and no business, and then basically they're throwing away the forgiveness aspect because you can't go apply for this again. So it's loans up to 250% of average monthly payroll costs. I'll go over that with the calculation and all that in a few minutes. Up to $10 million. It can be 100% forgiven if it's spent in the following 8 weeks that you receive the funds on the forgivable expenses, the specific costs. And it is for employers, businesses, and nonprofits with 500 or fewer employees, including the self-employed and contractors. And I will touch on the self-employed and contractors just a little bit. Unfortunately, there isn't a ton of guidance on them yet. And I will preface this with saying, I don't know a lot, or we don't know, or there's not a lot of guidance yet, and we're still waiting to hear. So it's gotten a little bit better in the past week and a half, thank God, but there's still stuff we just don't know. We're just still waiting, and things are still changing. So in regards to the self-employed, or in regards to the, for the amounts, you either have to have payroll expenses or net earnings to be considered as payroll. So again, I'll go into that. All right, so to be eligible for it, you have to have it's a business or a nonprofit, 501c3 with less than 500 employees. This includes full-time, part-time, and other. And there's affiliation rules. So if you have a business that has more than 500 employees, but you have several locations, those rules are waived, but only if you're with an NAICS code starting with 72. So that's like the hospitality industry and restaurants. So I know that's kind of confusing. That's accounting-y talk. But basically, if you own a large business under one tax ID and you have several locations, and all those locations add up to more than 500 employees, typically there's called affiliation rules, and there's things that you're exempt, you can't do. But with this, if your business code starts with the 72, which is the hospitality industry, those rules are waived. Okay, so you had to have been in business on or before February 15th of 2020. So if you just started March 1st, I'm very sorry for you. And it does, like I said, include sole proprietors, independent contractors, and eligible self-employed individuals. I do want to say something about partnerships here. So there's a lot of, there's LLCs or partnerships, they file 1065 tax returns. Like a good example is our attorneys. A lot of attorneys are partnerships, and they do not take formal payroll because maybe they don't have any staff, it's just the attorneys working. They take what's called guaranteed payments that we don't really know. There's not a lot of guidance on how people qualify for the loan portion on 1065s for these kind of people. We're working on it. We have an idea of what's included. It's the net profit, and we assume it's the earnings that flow through to the K1 for the partners, but some banks are disallowing it, and some banks just don't know what they're talking about. So unfortunately, they're kind of in this limbo state right now. So what we're really talking about are people that have, right now, like what I'm getting into, is people that have true wages. So like W-2 employees, as you call them, which does include owners that are on payroll as well. So payroll costs are defined as wages, salaries, commissions, or similar compensation, tips, cash, or equivalent. So if you have a restaurant and you have tipped employees, that's included, or a hairdressing salon, for example. Vacation, parental, family, or medical sick leave. So if you paid someone, for maternity leave, you can include that. Allowance for dismissal or separation, so severance pay, and then also includes payments, the employer portion of payments of health insurance premiums, dental, that kind of thing. employer portion of retirement benefits. So if you do a simple plan or a 401k, the match or the employer contribution, that's included in the payroll cost, as well as state local tax assessed employee compensation. What that means is, because that's a very techie term, it's, as a good example of this is state unemployment tax. Employers have to pay a separate tax. It's not deducted from employees' pay. It's state unemployment. So in Massachusetts, we have lots of other taxes that employers pay, which is this mass paid family leave, and we have an EMAC tax. But in other states, it's just state unemployment and any other associated tax that is assessed on employees' wages that the employer pays separate from the employee's deductions. All right, so I'm just reading that. Oh, and it does not include, I apologize, I did not update my slide from when they actually excluded the income from sole proprietors, the amounts that you paid to sole proprietors of 1099s that cannot be counted in as payroll costs. I apologize, I thought I removed that from the slide because that has changed since the last time I had this slide. So
that was just updated like last Thursday night.
Yeah, and we just,
so we'll make sure we remove that before we send out the slide to all of you. Yes. So that won't be there.
So you cannot include sole proprietors in that you paid out as people. It was very confusing last week, but the second part says up to $100,000 annually. That means if you have any employees that earn over $100,000 a year, when you do your calculation, you have to exclude the amount over $100,000. So there's been confusion with that. I'm just looking at the questions really quick. Oh, no. The confusion with that, people think you exclude employees that make over $100,000 entirely. That's not true. You exclude the amounts over $100,000 in the calculation. I'm going to do an example thing too in a minute. So again, payroll costs do not include over $100,000 if the employee principal residence is outside of the U.S. And then you also do not include employer FICA taxes, so Social Security and Medicare, federal taxes. So if the employer, and FUTA taxes, so if the employer pays, which they do, Social Security, Medicare, and federal taxes, that is not included in the payroll costs. And again, subcontractors are also not included as well. So, all right, to get into the calculation of the loan size, now the CARES bill has one thing, okay? And the banks and the SBA put on their application other things. So I did a mix of both because the law is one thing and the banks are another, and it's kind of like a free-for-all right now. So it's really exciting. Basically what you do is to get the loan amount that you're doing, you take either, and you have to have been in business the past 12 months. So if you're an existing business, you take either the monthly payroll costs during the 12 months prior to the loan origination date or the application date. So that would be, for example, April 1st, 2019 through March 31st, 2020. Or you can now do monthly payroll costs, the average of it, for the calendar year 2019. The CARES bill, the law, says the prior 12 months of the application date. The SBA application says the calendar year 2019. And then the most recent FAQs issued by the US Treasury say either or. So it really depends on what your bank wants to do. For a lot of businesses, this really doesn't make a big difference what period you choose. However, for example, my business, I have two entities that I pay. And in 2020, our payroll was just a little bit higher in 2020. So I prefer to use the 12 months prior to the application date and not the 2019 calendar year. So it can make a slight difference. And my bank is accepting either or. So you just have to have the documentation to back it up and have a conversation with your banker. But it is confusing because the law says one thing, the application says another, and then the facts say both. So welcome to the CARES bill. All right. So if your business employs seasonal workers, you can use those time periods. Again, if you've been in business for the past 12 months, if you're existing, or you can use this really bizarre time range that they chose of February 15th, 2019 through June 30th, 2019, or March 1st, 2019 through 6/30, 2019. Maybe in South Carolina, maybe you guys are booming between this time period. That might be a good seasonal thing for you. I'm very familiar with Florida. My whole family lives down there. I know even them, that's not a good time period for them. So personally, I think you should just use the 12-month look back period, but that's up to you, and you have to go evaluate your numbers. And if you are not in business the past 12 months, so if you were a new business, you can look, the figures you would look at are the payroll figures between January 1st, 2020 through February 29th, 2020. So that is if you're a new business, all right? And I'm just gonna go look at the Q&A really quick to see if there's anything there.
We had one question about having a different employee, but the count being the same. And I did respond to that. It is okay if you have different people on. It's the count of employees, not the list of social security numbers or anything like that.
And we'll go over the count, which is also similar to this, how it's sort of just like whatever, float your boat that day, I guess. So, all right, so here's just an example of this. So this is based on the 12 months prior. It's not looking the calendar year, but either way. So let's say you're an employer, you have 100 employees, your total payroll for that time period is $15 million. You divide that by 12, you get the 1.25 million. You multiply that amount by 2.5, that brings you to 3,125,000. That is your loan amount, okay? B, you still qualify because you're under the 500 employees because they have 400 employees, but now their payroll is much higher. And you do the 5 million, that's the average of the 60 million over 12 months, multiply by 2.5, that brings your amount to 12,500,000. You only qualify for 10 million. So it's capped out at 10 million. I don't think most small businesses looking at this have that situation, or they've actually already applied, to be honest. That's where you saw the huge push last weekend, where the huge businesses that are like this. And then employer C is not eligible because they have 800 employees. So again, this is using the 12-month look back period, but you can also use the calendar year of 2019. And for most people, that is the easiest. And it really doesn't make a difference. So that's a very simplified way of looking at the calculation there on how to get the loan amount.
Erin, just to clarify, that payroll costs, you're not pulling that directly off of your payroll report in some cases. You are adding other sort of expenses in there.
Yes. So again, the expenses I mentioned above, which were healthcare costs, so that's health insurance, the state unemployment, the state tax assessed, and then the simple plan, like the retirement match, all of this goes into it. So there's some reports out there. Like, for example, ADP, they have done customized reports that have these figures, right? They actually fixed them finally. They got their ducks in a row and figured out the law and they fixed them. However, a lot of employers don't put in their employer portion of the health insurance on their payroll, so that figure will not be included on that report. Sometimes the retirement match isn't always reflected accurately in payroll because there can be adjustments made outside of payroll because it's the match portion that does not have to go on the payroll. So if you're using reports, just please be careful and make sure you're actually doing the due diligence of adding things up, going back and look at your health insurance statements, your retirement plan records, all that stuff. Don't just trust the payroll records. And that's also why it's important, I believe, to have somebody that knows what they're doing look at this stuff, because there is a lot more that goes into it. Thank you, that's a good point. So we are asking for polling questions just because we're trying to gather information on what people really need help with.
Erin, are you able to launch that first poll?
Yep, 1 second.
Awesome.
For some reason, just polls, launch polling. All right, so if you guys don't mind, it just helps us figure out what we need to focus on for education, and we're just trying to get an idea of how people are learning about things. And while this is going on, this question is very important to me because if you happen to follow us on social media, or me personally, I have gone on a couple times, and I really am concerned with where people are getting their information and also providing information. So one of my big sort of soapbox speeches is please be careful with what you read on social media or advice from friends and family. Right now, or give advice to people based on what you heard or know. Right now, doing the wrong thing, taking the wrong step, providing the wrong bit of information can mean the difference of someone staying in business or losing their business. So it is extremely important to go to the professionals and find out the correct information and not ask social media how things work, how, you know, what kind of loans there are, what's forgivable. Really, there's so much information out there that's so bad, and it actually scares me when I think of business owners taking this advice and they're scared and they just want to act. You just have to be careful when you're asking for advice and giving advice on social media. I cannot tell you the stuff I've seen is crazy. So it kind of stresses me out a little bit. All right, I think
right now everyone's just trying to be super helpful and give any information that they hear from people. It's just a scary thing to be thinking that some of that information is incorrect and being shared all over the place.
Yes. All right. All right, so we had most people vote. We'll just end it now. You can share it. So thank you. You're reading web articles. Thank you. Social media. I mean, I guess I should say finding out about stuff on social media isn't the worst as long as you're being pointed to a professional. That is a great way to ask for advice, is what professional or professional resource can you direct me to? That's actually a great way to ask a question on social media or provide help. So looks like good. All right, and I'm glad that people have actually looked into them. All right, let's move forward. All right, so there's been a lot of confusion with which type of loans are eligible under the PPP. I think some of this was cleared up in the past week since the program, opened, but there is only one SBA loan eligible under the forgiveness of the PPP. That is the SBA 7A business loan, and it's the one that was just issued. It's not an existing SBA 7A loan. It's the one that was just, decided upon, voted upon. So, and you must go through a third-party bank or lender. You cannot go directly to the SBA. I'm sure most of you have figured that out by now. They were going to have it through the SBA, but then they changed their mind. And this is typically how a 7A works. And by now, either most banks or lenders have either opted in or opted out. We do think some large credit card companies actually might step in too, because they actually have the infrastructure in place and technology to be able to do this, and they have the funds. But as of right now, it's your third-party bank or third-party lender. And most banks that I'm aware of are really only helping their current existing clients or customers. So you probably found this, you're probably getting emails from your banks about what to do. So unfortunately, that's the case, but I understand their situation. But there are places like Cabbage, for example. They're an online lender. They're taking applications in if you didn't want to have to wait through your bank, or maybe your bank's not doing it, or your bank is just a pain in the butt. The loan term has changed. It's now 2 years from the date of origination, and the interest rate is 1%. So this has changed quite a bit. I think it was 10 years. Everything has changed so much. I think it was 10 years before, and up to 4%. Now it's 1% in 2 years. So the important thing here is if you take out this loan and you aren't able to get most of it forgiven or any of it forgiven, then you are going to have to pay it back within 2 years, which is a very short time period to pay back some of these loans, even though the interest is low. Principal and interest will continue to be deferred for a total of 6 to 12 months. I believe it's just 6 months now. I think that just changed, but after the disbursement of the loan, and payments will be deferred 6 months after the disbursement of loan. So you don't have to start paying this back for 6 months after you receive the funds. The maximum loan amount is $10 million, and only one PPP loan program per entity or tax ID. So you can't apply for this a couple times under your business. That's pretty common sense. So you don't have to personal guarantee it. Normally with an SBA or most loans, you have to actually file a personal financial statement. There's no SBA lending fees. There's no collateral, so you don't need to have any assets to guarantee the loans. There's no need to show ability to get credit elsewhere, so no credit worthiness, but you must be able to show the ability to pay the loan. What I understand from banks so far is there's not a whole lot of underwriting going on. You just need to provide the reports to tie out to the amounts that you provide on the application, and they're sort of just pushing it through, as far as I know. So as long as your systems are up to date, that's kind of my understanding, but you must show the ability to pay the loan.
Which makes sense. I'm not sure if she mentioned this yet or not, but they are federally backed loans. The banks aren't backing these loans on their own.
So yes, they're 100% federally backed, which means that the feds are guaranteeing it, which is why. So last week when you heard or probably this week too, this weekend, and last week you probably heard these huge numbers of all these banks issuing these funds. I want to be clear here. And this weekend, the SBA was not issuing funds. Banks were getting applications, literally just keying in the numbers and then depositing funds out of their own loan reserves and putting it in their customers' accounts. They were not being processed by the SBA. There was just a huge push to get numbers out. There's a couple theories as to why. Some of it is banks wanted to get their numbers up to get more funding in. I don't really know why they were doing it, but it was causing a lot of scare and hype for especially people that haven't applied for it yet. But it was not the SBA funding. It was the bank's funding over the weekend. Now, since then, the banks have been submitting through the SBA and waiting for, the banks aren't just funding it like smaller local banks, but that was not the case last weekend, to make that clear. So there is allowable use of loan proceeds to be eligible for the forgiveness. So to be clear here, you have to use the loan proceeds for the eligible costs, even if you don't end up getting forgiven, they have to go or it's considered fraud. So you can't take these funds and you're like, oh, I don't really care if I get the forgiveness, I just need a loan and I'm gonna go pay my marketing bill. You can't do that, you're not allowed to. I don't know how they're gonna police that, but you're not supposed to. So what's allowable forgiveness is, or allowable expenses are the payroll costs, like I defined them, like the wages, the health insurance, the match of the retirement. So costs related to the continuation of healthcare benefits during periods of paid sick. So if you're paying for someone's health insurance that's on paid leave, that's included. So you're paying the whole entire portion, you can do that. So again, it's employees' salaries, commissions, or other similar compensation. Also, it includes any payments of interest on any mortgage obligation. So just interest from a mortgage. It does not include the principal of a mortgage. It does include rent, utilities, and utilities are defined as things like, water, electricity, oil, basic internet is included, basic utilities to operate your building, basically. And then also it includes any interest on any other debt obligations that were incurred before the period, which was 215. So that's like if you have auto loans that you pay through the business, loans for equipment and whatnot. So that interest amount is included in the cost that's eligible for forgiveness. So how to calculate it? Now this is where it's incredibly important to understand. You can get up to 100% forgiveness. That's what it's intended for. However, what they did change last week is 75% or more of the loan proceeds must go towards payroll costs. What it was before, there was no cap on payroll. Before you could have had 75% on the other expenses and 25% payroll. What they did now is change it to 75% must goes towards payroll costs. It can be more than 75%, but it cannot be less. So you could use your entire thing towards payroll, 75 to 100%, and you don't need to pay any rent. So some single owners for businesses, I think this is an awesome program. If you're like a single member, individual, you own an S Corp and you're the only employee and you're the owner, I think this is an excellent program. It basically pays your payroll for 8 weeks. But so you could do 100% towards payroll costs, but it cannot go below 75%, and then it's going to be prorated the forgiveness. The other 25%, it will go towards, rent, utilities, mortgage interest, that stuff. Now, when it comes to the employee count, here's the other thing, that the banks and the SBA and the US Treasury are all doing different things. According to the CARES bill, it says you have to have the same number of full-time employees during the 8-week period during a certain look-back period. So according to the CARES bill, the look-back period that you compare your full-time employee count to is February 15, 2019 through June 30th, 2019, or January 1st, 2020 through February 29th, 2020. So what we're doing is figure out the full-time employee count for both periods, and we're choosing the lesser amount, obviously. However, what the US Treasury just put out in their most recent facts, and banks are saying, is that they'll take the average full-time employee count of the period that you use for the loan amount, so that you use to calculate your loan amount. Okay, so it's kind of up to you and your bank again, what period you choose. For our clients, we're going with what the CARES bill said, because in my opinion, when it's gonna really matter is on the forgiveness application aspect. And I believe that's when they're gonna follow the rule of law. My opinion, I don't know that. Who knows what they're doing? But basically you just need to use a period to count your full-time employees. So what that means, a full-time employee count is a special calculation. It can be done many different ways, but they're basing it off of 40 hours a week. So what we're doing is taking the total number of hours paid during a period, not including overtime hours paid. You do include the overtime pay paid on the loan amount. And we're figuring out the number of pay periods, multiplying the number of pay periods by 40. So let's say it's 21 pay periods, that's I think 840 hours. You divide the total hours divided by 840, and that gives you your full-time employee average. I'm sure that was very confusing, but.
So just to be clear, guys, it's not just taking the number of employees you have, it's figuring out what your full-time equivalents would be. So if you have a bunch of part-time employees, you wouldn't count them all as one.
No. Yes, exactly. So it's confusing. Again, that's why I believe it's important to have somebody help you with this application and all the counts, get everything together, because this is actually where you can kind of screw yourself, you want to say. You can really, if you over-report your full-time employee count and then you get to the 8-week period and you can't bring back these employees, it's going to reduce the amount that you're forgiven too. So you have the 75% of the payroll costs that have to be followed, plus the full-time employee that has to be followed. So if you before in the look back period had 10 full-time employees, but now you have 5 during the 8-week period, you've already reduced your forgiveness by 50%. So I know that's confusing. We're available to help later on, but that's how it works. And it's basically as long as you maintain the salary, so you have to have the same payroll costs. You have to basically cover the payroll costs. It's the last point is just reiterating the 75% of the total costs have to be payroll. Okay. Now, like we said, you do have to apply through your lender for forgiveness you apply for your lender for the loan. Then according to the law, you're gonna have to apply it through your lender for the forgiveness. We don't actually know what the forgiveness application will look like. That's not out yet. What we do know is that they're gonna require a lot of documents. So you're gonna have to include documentation verifying the number of employees on payroll and pay rates, including your 941s, your state unemployment filing, all that stuff. Documentation verifying your payments on mortgage obligations, lease obligation utilities, so canceled checks, copies of the bank statements where you have those payments coming out, and then certification from a representative of your business or organization that is authorized to certify that the documentation provided is true. Amounts is being forgiven as we use in accordance with the program's guidelines. We don't think anybody's going to have to take a program to become certified in this. We just think it's the owner of the business is just certifying that the payroll costs, that the expenses were used towards the qualified expenses. So you're gonna have to sign something saying that, yes, this is all true. You're not being a fraud, basically. So I'm gonna get into the next steps of the Paycheck Protection Program in a little bit about what we think you should do moving forward. So Charles, you just asked a question. My employee averaged 30 hours last year, and the same year. How many employees? So Charles, I don't know if you're on payroll as well, but to me that's over one. If let's say you are on payroll, that'd be over 1.5 employees. So technically, we're even putting the decimal on applications. You have to have the same equivalent. So they would be under a full-time employee, but I think that would average, if it's just one person, that's still averaging to 1. In my opinion, it's going to be up to the banks to sort of decipher that, but it's tough when you get below the 40 with the 30 hours. So in my opinion, you have 1 employee, unless it's you and the other employee, then you have 1.5, if that makes sense. 1.78.
Yeah, technically you could put the, point, whatever that equals out to, but the bank will probably consider it as one.
Yeah, 1.75. So you'd have 1.75 in place, or 0.75, which rounds up to 1. So, you're welcome. All right, I'm going to go into the EIDL, disaster loans and grants. This is a fun topic since it's been really interesting the past 2 weeks. This is the economic injury disaster loan. You guys have probably heard about that $10,000 grant or advance. I just think that they had no idea what they were getting themselves into, and they're making the rules up as they go. That's my opinion based on what I've seen in the past week. But these economic injury disaster loans are available through the SBA. I'm sure most of you have seen it. You go to the SBA's website, you can click on disaster loan and apply. What the injury disaster loan used to look like, it used to be a very extensive application. You can get up to $2 million in funding, which you still can, but it had personal financial statements, month over month financials, all sorts of things, which is a normal loan application. And that was fine. Then a couple weeks ago, they put the website down for a couple days, and then they changed everything, and they really, really simplified the EIDL loan. It takes about 10 minutes now if you have your figures in front of you. What they didn't tell us, or anybody, is what information they're using to base the qualifications on, the loan amount, because all you do is put in your gross revenue. If you have cost of goods sold, like if you're a restaurant or a contractor or something, your employee count, and they didn't define employee count for this, so that's another thing I'll talk about in a second, and that's basically it. So we don't know where they're getting what they're using to determine your loan amount. But then you also could request up to a $10,000 advance/grant. And they promise that it'll be in your bank account within 3 days and of applying, whether or not you were approved for the loan. So fast forward almost 2 weeks. Obviously that's not the case. I don't know anybody that's received the funds yet. We applied, most people, last Monday and Tuesday, so over a week ago. Yes, I will go into that. Yes, Charles, this is in addition to the PPP. He asked, is this grant in addition to the PPP? Yes, and I'll explain how it does integrate with the PPP in a second. So you can apply for this. What we did recommend is if people needed the cash, go apply for it to get the grant, because we thought they'd get the money. Well, they didn't. So what came out recently with the Massachusetts SBA, the head of the Massachusetts SBA, and the reason why I'm saying the Massachusetts is because I have a network of about 12 accounting firms around the country. 2 of them are actually in South Carolina, and no one has heard guidance anywhere else. But what we've seen is that they base the grant amount on number of employees listed, which is up to $1,000 per employee. The problem with that is employees technically are defined as someone receiving a W-2. So if you filled this out and you were like, I'm a sole proprietor, I don't technically have any employees, I put 0 down, that means you're not technically eligible for this grant based on what we've heard. I don't know if that's true. I don't really know what they're doing, because I don't even know if they're issuing payments yet. And also how this works with the PPP is, let's say you do get a grant, let's say you get $3,000 for the grant portion. If you do go apply for the PPP, it will reduce the forgivable amount by the $3,000. In our minds, that was okay, because basically, in my mind, if it was gonna reduce the forgivable amount of the PPP, that was okay, because people were sort of like taking an advance on the PPP, like forgiveness aspect, and getting some cash now to hold them over. Obviously, they didn't get the cash because they haven't issued any payments, and we still don't know when they're issuing payments, exactly how they're determining the grant amount, and we don't know how they're determining the loan amount. So, as far as I know, is if you do qualify for the grant based on employee count or whatever they're using, you still get that, even if you don't qualify for the loan. That's still supposed to be in place. What I've heard is that they're supposed to be issuing the grants or / advances within 3 days of reviewing your application and approving or denying it, which completely goes against what they originally said. But that's what we know on the EIDL. Do I think it's a good idea to apply for? Right now, I don't even know if there's a point. You could try, but I guess what I do recommend, if you don't qualify to apply for the PPP, or it's not worth it, because let's say your payroll was so small, or you're a self-employed person, and how they base the PPP is a lot different from how they do it with regular wages, then I recommend going applying for this and seeing what you can get. That's my recommendation here. But if you're already in the PPP process, maybe it's not even worth it because they're funding the loans relatively quickly for the PPP.
Erin?
Yep.
Just as a side note on this, I'm in a group of chamber professionals.
Yep.
There's about 4,000 of us, presidents and executive directors across the country.
Great.
And almost all of us have applied for this EIDL loan.
Yep.
And as of last night, I was just kind of looking through the whole thing. Not one single chamber in the entire country, because we're 501c6, so
Yep.
we can't apply for the PPP.
Okay.
And not one has received any funds from this. So
Oh my goodness.
it's just
Yeah.
there, but it's not there. So
It's great. Thank you.
awesome.
I know what I personally think happened was, I think they put this program out, didn't realize, I don't know how they didn't realize this, that people would take advantage of it. And just because all you needed, was a tax ID of some sort, not even a business tax ID. You go in there with a social and just throw numbers in. So obviously there's a huge amount of fraud that can happen. So the limitations for applying for the EIDL is you have to be under 500 employees. So your businesses are nonprofits with 500 or fewer employees. That's pretty much the qualification. And you have to certify that you have economic hardship. That's pretty much the two requirements to be eligible for the EIDL. Prior to this, when the normal EIDL was completely different and you had to prove all sorts of things. I don't know when they'll go back to that, but I hope, Robert, I don't know if that answers your question. So these are lower interest loans up to $2 million. They're deferring it, the payments. I don't know exactly how much they're deferring it. Unfortunately, there really is not a lot of information about these loans anymore at all. You could use these. So this loan that you receive is not to be intended for the use of the same proceeds that you get from the PPP. So you cannot use these for payroll costs during the time that you have the PPP. You can use them before that you get the PPP, if you get the funds of the PPP, but you cannot use them together at the same time for the same things. So you can use them for other operating expenses, like if you need to purchase food, material, like if you're a restaurant, or materials. Formula said PPP plus less EIDL, less money advance. So if you apply for the PPP, there is a question on the application that says, have you received a loan in the past, I forget, recently, from the SBA? If you have not received it yet, I don't know how you can say yes that you've received it, because you technically haven't. You just applied. The question says, have you received funds, not have you applied for another loan. So I guess interpret that how you will, but there is, as of right now, there is no, it's when the funds run out for the deadline. There is no, it's just, unfortunately, we don't have a ton of information about this. It's sort of just one of those loans that it's like, good luck, I guess. Go apply for it. You have to be under 500 employees and have economic hardship. But as far as we know, there's no deadline. It's just when the funds run out or when they take it off their website. But it does, if you do receive the advance, it will reduce your forgivable amount on the PPP portion. The proceeds cannot be used for the same purposes during the same time. So if you have marketing expenses or other operating expenses that you have to do, you can get that's what you can use the EIDL loan for. My opinion on this, if you finally do receive a loan from this, people are saying, well, I don't even need the loan. You know, if you're fortunate, you have decent cash flow, or maybe you just don't need the loan proceeds. My opinion on this, it can't hurt to put the money aside in a separate bank account just in case you need the cash later on. What's good about this loan, if people qualify, I think yesterday they said like 200 billion had been used so far for the PPP. Someone just asked 350. It all depends, because the banks are finally, like the small banks here are finally catching up and just submitting yesterday for the small businesses. So,
and Erin,
yes,
Yesterday I was on a call with the Bankers Association, just kind of listening in on some of this, and most of them felt like the funds would run out like by today.
Yeah.
They
So
were encouraging everybody to get all of their applications in today.
so I'm gonna talk about that in a minute, too, for sure. So, okay, the EIDL, I don't know what we're talking about. Oh, keep the money in your account. Some businesses that actually get a loan from this might never have been able to get a loan under normal circumstances. So if you were just if this was not happening and you went to go apply for a loan, a lot of businesses don't qualify for funding. So in a way, it's kind of nice to have a business that would not normally get funding to get it, stick in an account if you don't need it. It's low interest, 2.75% for nonprofits, 3.75% for regular businesses, and they are deferring the loan terms. And so just stick it in an account until if you do get the loan proceeds. That's just my opinion. You don't have to, you can pay it back. So, okay. This is, I just went over all this information. So if you receive the PPP loan, you advance this, you reduce the amount that you receive from the PPP loan from the advance. And again, the grant is that's what we know of, up to $1,000 per employee. We don't know what happens for those companies that put in there 0 employees. We don't know what you're supposed to do. For like what I said, if you're a sole proprietor and you didn't count employees, and though you're technically, they redefined employees apparently and never told anybody. So this just reiterates what I just spoke about. All right, one more polling question, and then we'll continue, and I'm going to talk about the next steps. And I should probably, oh, Amber, you can't do it. 1 second.
This would be a great time to throw any questions that are coming up into that Q&A section, if any of you have any.
Yeah, if you have questions, you can put them in the Q&A too, but if you want to. So what is the current status of your business due to COVID?
We find a lot of people have been finding it, I don't know if it's so much helpful as they like to know what everybody else is dealing with, feeling like they're not alone, feeling like they're not the only one in this and dealing with it. So this question helps us figure out how much of you are going to need to apply for the PPP right away, but it'll also give you an idea that what the local businesses around you are feeling and how they're being impacted.
All right. Okay, where does end polling? Let's see. So 67% of you are open. Well, that's good. And 33% of you are closed. Okay.
And I'm sure the majority of those of you that are closed are, non-essential and kind of being forced to.
Not essential.
Mm-hmm.
All right. So what we know now, and like Carrie's saying, there's like all sorts of groups have all sorts of information that are coming in, and we're just trying to do, like, we have a national group of accountants, several hundred accounting firms that are working on this. And then I also have a very close, it's about 12 accounting firms nationally that I Slack with every day, all day long, about updates, constantly trying to get this information. So we're just trying to share our experience and what we know, what we've heard. So what we know now is banks have been slow to get their systems up and going to process. Last weekend, like I said, when the numbers were going up, banks were just issuing funds, just keying into things and issuing funds. It wasn't through the SBA, but the SBA is starting to fund stuff now directly and has started this week. The US Treasury is coming out with new guidance and FAQs almost daily. So they have to come out with new guidance regarding sole proprietors. So how a sole proprietor would apply for this, they actually technically can start applying today. Even though we don't even know the forgiveness, there's been nothing issued about how they qualify for forgiveness. We don't know yet. So how a sole proprietor or like a 1099 contractor would apply is they take their net income for 2019. So if you have your tax return, you look at your net income on your 2019 tax return, let's say it's 25 grand, you divide that by 12, multiply that figure by 2.5, and that's the amount of the payroll, the PPP that you'd get. So if you do 25 grand, divided by 12 times 2.5, you get a $5,200 loan to the PPP. So that's how they're handling sole proprietors right now, or people. But if you are a sole proprietor and you have payroll, our understanding is you're supposed to do the payroll plus the net income. And for partnerships, you're supposed to take, if they have payroll, you take the payroll plus the income subject to self-employment tax, which would be on a K1, and divide by 12, multiply by 2.5. But banks are not. Some banks aren't accepting that. Some banks are. Again, it's kind of a mess, as you can tell. So expect delays and confusion from banks. Banks are asking people for things. I mean, in the past week, they have cleaned it up a lot. They were asking for calculations that were old and incorrect. People used to, what the original bill is deciphered as is that you have to deduct out the employee's federal taxes. So the federal withholding and the FICA tax, and that's the figure, the net amount you use for the loan amount. That was completely incorrect, but a ton of banks and payroll bureaus did that calculation. So it's just that they're kind of a mess. I'm sure you guys have experienced it. The banks are confused and they're finally getting their systems up. I do have a direct contact within the SBA. She's worked there about 20 years. She has been saying, don't feed into the media hype about, like, for example, restaurants going to apply for this because funds are going to run out. I do agree with Carrie. I do think that funds will run out, but they're going to go back and get more funds. I don't want people to be panicked if they haven't applied and putting wrong information in and listening to all this bad information. It can't really go anywhere good. Just do what you can, try to get your application together. But if you're closed, I don't know what the point is of having the loan. And that's what every banker I've talked to, an SBA person I've talked to, if you're closed and you cannot bring back employees, what's the point of the loan? Because it can't be forgiven. Unless you can pay it back in 2 years and you don't care and you just want a loan, then that's fine. Right now, there's a fourth bill and Congress is going back to get more money approved. Fortunately, Donald Trump does support small businesses, so I do think he's going to push whatever he can to get more funding for this, because most small businesses actually haven't even applied, because it's all been the big businesses that are getting around $10 million that have been pushed through. It's the businesses like ours that have 7, 8 employees that haven't really been pushed through because the smaller banks haven't been up for it yet. So there's several options available. I didn't discuss unemployment like I said I could, but what we're suggesting, if you are closed or your revenue is greatly decreased, lay off your staff or your team if you have not. I have spoken to quite a few businesses that feel obligated to pay their employees because they do have some cash, but that is not a good idea. I understand it. Trust me, I love my team. I would do anything for them. But the best thing employers can do for your team right now is put them on unemployment so that they have a job to go to in 6 months. I know it's not the easiest thing to tell someone to go on unemployment, but it could mean that you pay them for a month or two and then you close, or you put them on unemployment and you have a job for them in a few months. You can try for the EIDL loan or advance or grant. There are some paid family leave and employer credits available. I did have another webinar on that, but things have changed so much, and that's really, it's not something we're really getting into with most people. I'm happy to talk to you about it if you want, but there are employer leave credits available, and we have information on that. Then also get cash wherever possible to hold you over personal lines of credit. Contact existing banks that you have existing lines of credit and request an increase. There are lots of banks that are offering 0% credit cards. I hate debt. The other thing, I just do not like debt, but if you absolutely need it, even if you just need, insurance with money in the bank, just take out some money and put it in the bank, have it. And then one of the biggest things we always preach to our clients is before you consider debt, cut and reduce any expenses that are not essential to operate your business. This is just an everyday practical thing. If you have to ask yourself when you're going through your expenses, does this expense make me money or is necessary for the operation of my business? If it is not, you should cut or reduce it. So that's just my PSA for that.
I will note on the unemployment for South Carolina. So for Massachusetts, it's a little bit different. Massachusetts has not yet put any sort of cap or any sort of relief on employers. So if everyone goes on unemployment, as of now, Massachusetts rates will go up. I did notice in South Carolina that your law allows for the removal of charges from employers when unemployment benefits are paid are paid as a result of a natural disaster, either declared by the president or declared by your governor. So I'm not 100% sure that your rates won't change, but it does look like that is in there for you guys. So,
and also for the federal portion of the unemployment, that's the extra $600 a week that they keep talking about. I know Massachusetts payments just started going into people's accounts yesterday. It depends on how quickly, we tried to look it up for you, how quickly your unemployment system catches up with it. But that is also not, it's going to be issued, the payments will be issued by the state, but it will not affect your unemployment rate either. And it's supposed to be retroactively backdated actually until January, but I think it depends on the state. So Massachusetts just said they're going to retroactively backdate them to March 31st. But they're through July 31st. So it's a 13-week period that the extra $600 per week per employee. And that's business owner as well. So if you're a sole proprietor and you're not on payroll and the PPP is just not even worth it, go file for unemployment through your state and you'll get at least the $600 per week from the feds. And you can backdate your unemployment to when your business closed. So if you were ordered to close March 15th, like most people were in a lot of the country, you can backdate your unemployment request to that date if you're self-employed. But if you have payroll in April, if you issued yourself a paycheck in April, that's not going to work. So you have to, date it before you have the paycheck. But you can do that. So what's next? If you haven't started getting your stuff together for the PPP, you should. And I know that Carrie just said that the funds are going to run out. We're still not having. I really don't feel comfortable applying for or helping someone apply for a loan that they're not going to get forgiven, but we're still prepping the documents and hoping that they go back and get more money and can get the loan then. The banks they have to release the funds within 10 days of being approved for the loan. So let's say you go apply today, you don't get approved till Monday, you can request that they hold off funding the loan for 10 days and your bank should be able to comply with that. So that gives you another 10 days to kind of wait to get the funding, because the 8-week clock starts ticking the date you receive the funds. This is the reason why I keep saying you should either wait or it's not worth it, because it's not gonna be forgiven unless you just want a loan. What I'm hoping that comes out with the fourth bill is that you can apply for this, get the funds, and then you elect your 8-week period. That would be a perfect world. So like a restaurant can stop panicking, they can go apply for it, then they can have the funds in their bank account, and then when they get word they're going to open, then they can elect their 8-week period to start, and then they start using the funds. That's my perfect world, and I think that makes the most sense. But it's the government, so things don't.
Talk to your representatives.
I think that's yes. So if they had that thing together, I would be pushing our clients to apply immediately to get the funds, even if they're a restaurant, because then they could just sit there and then have an election date. But excuse me, I'm talking a lot. Be shocked, but I actually talk a lot normally, and sometimes this is. Anyways, so you have to get your payroll records together. Some banks are asking for prior year returns. It's always a good idea to have your bookkeeping up to date. Some banks are asking for up-to-date profit and loss. Some banks are not. It really depends on your bank. We are also recommending some steps that you take, that you set up new chart accounts in your chart of accounts for your bookkeeping, specifically related to COVID expenses, so that you can start categorizing these properly so that you can actually get this stuff forgiven and it's much easier. And then we also are recommending for a lot of people to open a separate bank account to deposit the funds to, so it's even easier to track the loan proceeds and the expenses. And the next step that I think is actually critical for most people that they're really not thinking about, most people are just focused on, let's just get the loan, let's just get the loan, let's get the loan. That's actually the easy part. The hard part, and it's going to be the next steps. I have this thing in 4 phases. The application, the next step is going to be planning. So once you figure out your loan amount that you're eligible for, you need to then figure out, okay, how am I going to actually maximize this loan amount to maximize the forgiveness so I get 100%? You need to make sure you have the full-time employee count there. You're going to have the payroll amounts to match. So like to match the 75%, that you have all this stuff going. You really should work with someone to plan your cash flow and really plan this out, because what I fear is going to happen, people are just getting this loan and they didn't plan, they're not going to document it, and then even if they did the stuff the way they're supposed to, quote unquote, they're not going to get it forgiven, because when the application process actually happens, you go apply for your bank, that's when the economy is supposed to be back up and running. Okay, so you have a government agency and you have a government entity and the banks essentially auditing these forgiveness applications. They're going to ask for all this documentation. Well, they're going to be a lot less likely to forgive things then, because the economy is back up. You don't necessarily need the funds. I don't trust the government, stuff like that kind of stuff. I just think that this is actually the space in between is the critical part of this. It's not just the application. It's the stuff you do after you receive the funds, or right before you receive the funds and then when you receive it. So if you can plan the timing of applying for the loan and the receipt of the funds. Like I said, the banks have to fund it within 10 days of approval. So see if they can push it out if you don't need it right now. Document everything extensively. Be prepared to save the checks, copies of bank statement, etc. for proof of payments. Use a separate bank account, and then create new accounts, the chart of accounts, like I said. Now, not only does this affect this forgiveness thing, but you also have to think about year end when you actually go to file your tax return and you're doing tax planning. There's no guidance on how they're going to handle it, but these expenses are not going to be deductible. You're going to have to completely isolate these expenses in your bookkeeping and your tax return, but they're still most likely going to have to be reported on your tax return. So that's another thing you have to take into consideration. It's not just for the gift forgiveness aspect. You want your books perfect for tax planning purposes and then tax preparation. Because if it's not right, everything's just going to be wonky. You're going to end up spending thousands probably with your accountant fixing all this, and God only knows what at the end of the year. So that's really what we're helping our clients with, is really the middle part, is making sure that the compliance part is really, really being adhered to, so that we are doing our best to make sure our clients do get the 100% forgiveness on these loans, because that's really the important part. All right, what else do we have? All right, so we're here to help out. We love helping small businesses. We do have a package available that just discussed all that. The only thing that's not included is the actual application for the forgiveness, because we don't really know what's included. But like we said, on our social media, we have a group that you can follow that we're doing updates all the time. You can email us, call us. We're here. We have a great website. We have a COVID page with tons of information. And I just had a brain fart. But
and we do offer these kind of educational webinars, not in a crisis, as well, for free to people. So if you kind of follow us, you might find some topics that you actually find interesting and need some help on. So
yes. And
I mean, we can open up the floor for live questions if anybody has any. You just have to click that raise hand button that's at the bottom of your screen. If you raise your hand, we'll unmute you. Otherwise, we can kind of hang out for a couple minutes, make sure none of you guys have questions, and then, go from there. Thanks, Charles. I'm glad that you got some stuff out of it.
Thank you. I know it's a lot of information. Again, if you guys want me to talk at all about the stimulus checks, I can. There's not really much to talk about. Maybe you probably already know about it, but I took that portion out. I just wanted to focus on the businesses. So.
You guys, this is probably the best one of these that I've sat through, and I never ever in my entire life thought that I would ever sit through any kind of SBA loan. Like, this is not in my wheelhouse. And so I have been trying so hard to educate myself, and this has been the best one I've sat through yet.
Well, thanks.
Really simplified everything and sort of walked, because I'm in the same boat as everybody that's on this call. I still have to try to keep the chamber afloat. And so this has been fantastic information. I'm so glad I was connected with you guys.
Oh,
so.
well, that means a lot. Thank you. Yeah, we're in an industry that's really, really hard to simplify explanations of this stuff. So I always try to do that for our clients and like the business people, but I'm really glad to hear that. I know this can be so confusing, and I know people will get off of this and still be like, what is she talking about? We are offering free consultation phone calls. We're going to send a link out after this. That's what I was going to say. We're going to send an email out with the webinar, the slides. We'll make the we'll send you the recording of this as well as the slides. We also have like a business planning thing with all the facts on there about it we can send too for the resources. But that's really nice. I really appreciate you that. We're happy to help whenever and give updates and stuff like that too. So.
All right. Well, I guess if anybody has questions, feel free, like maybe stick around for just a few more minutes, and then we can say goodbye.
Yeah, Jennifer, if you want, we'll also put a link to schedule a free consult call in the email too. So if you guys have specific questions and you want to schedule a call, that's totally fine. We can do that as well. So.
Awesome.
All right.
Cool.
Oh, we do have one more in here. Oh, no, just a thank you. You're very welcome, Jennifer. Thanks for joining us.
Well, I hope everybody gets to have a nice weekend. It's actually, the sun is shining here for now. April and May for us is like Seattle, where it's like in the 50s and raining. So I'm hoping it's a little nicer. And they just closed all the parks and beaches.
Yeah, ours have been closed for a little while, for about a week now. But it's beautiful here. And every single person has spring fever and is just
wanting to get out.
dying inside their homes, so
it's really tough. It's really tough. I mean, yeah, my whole family lives in Florida, and I've been thinking about, in the beginning I was going to fly down because I have my little kids and stuff like that, and I just haven't done, but at least they have a pool and stuff like that. My backyard isn't that exciting.
Sam did say that Security Federal Credit Union is looking for PPP applicants locally. So if any of you guys need a bank, it looks like they are taking new people on.
Oh, yeah, I do have something to say. That's additional information. That's kind of fun facts. If you know somebody, or if any of you have existing SBA loans, a 504 or a 7A. So for example, the building I'm sitting in right now, we got a SBA loan. I was going to refinance it in January. I'm really glad I didn't, because they're paying my loan payments for 6 months. So they started with April 1st. If you know anybody that has an SBA loan, like I said, the loan payments, they're not deferred. They're actually being paid for 6 months by the government. So that's a little perk there. Also, what I found out this morning, if you know anybody that's in healthcare that is basically on the front line, so if you have a home healthcare worker, like work company, or you use Medicare, you work with Medicare, they're actually issuing additional grant funds to those companies for free. They don't have to be paid back. So for someone that's in Texas, she just told me that one of her clients applied for the PPP and they got an extra $216,000 in her account this morning for just this, because they're frontline healthcare workers to help that. So if you know anybody doing that as well, that's huge. So there's all these little things that are also in the CARES bill that really aren't being focused on, that we hope to get to later on, because there are things. If there's also a section, if you go through bankruptcy during this process, there's going to be a whole different thing that's not normal, that's going to be, I guess, really great. So hopefully when this thing sort of calms down, we're going to start looking into the other beneficial aspects of the CARES bill. But some of the stuff, I was pretty pumped when I found out that they're going to pay my mortgage for 6 months. I'm not going to lie. It's like, wow. I guess it makes up for, normally SBA fees are very, very high. So it probably makes up for all the fees I paid in the past. But yeah, there's all sorts of things, these little things here and there that can be very, very beneficial. So, and I will say, this is the PPP program this is the only time I think in our lifetime we'll ever see this amount of free money from the government ever. Was it Mark Cuban was on the other day? He's, big, huge businessman, saying, if you can do this, apply for it. And we 100% agree with it. A lot of business owners that are, the only employee on an S Corp, they're like, I don't really need it. They still have cash coming in. Apply for it. Do it. Mm-hmm. You're never going to see free money from the government again. Do it. It's worth it.
Yeah. All right.
Awesome. Well, thank you guys. My sister's stationed at Shaw Air Force Base, so I don't know how far away that is from all of you, but if I ever end up going down there, come visit. An hour?
Yeah, it's like 45 minutes to an hour, but they definitely contribute to our economy here in a big way. So we're really glad to have them and Fort Jackson here.
Next
You
time
know.
I visit, I'll have to come by the chamber and say hello.
Oh, we'd love to have you. Yeah, come to Irmo. It's a wonderful little town.
Will do.
Yeah.
Awesome. Well,
All
thank
right,
you so much,
ladies,
Carrie.
thank you.
Thanks,
Bye,
guys.
everybody. Thank you.
Enjoy your weekend.